I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. Welcome back to the show, Bob.
Yeah, here we are, Jim. Friday, and it's good to be with you.
How are the markets reacting to Donald Trump's talk of massive tariffs against China?
Well, it's mainly the news reaction. You know, people are upset by talk of protectionism because history shows that protectionism is pretty bad and free trade is very good. But you've had a condition where the U.S. is a victim of other people's protectionism, like try to sell cars into Germany, or Japan, or, you know, find California wine, sell them into France, or what was the other one I was thinking about? Oh, yeah, I remember years ago, California came up with a very good rice for Japanese sushi, but and it tested well, and so there's a lot of bad dealings out there against the Americans, and of course, as we've talked before, just with our own deal in NAFTA in North America with Mexico, U.S., and Canada, they left out the cheat, and the cheat, of course, was the Mexican and Canadian governments depreciating their currency relative to the U.S. So they have not had, as Trump says, a fair deal. And I think he has to shake the trees in order to move it somewhat more fair. And the other thing is that this bubble is concluding, and previous great financial mania, such as we've been in, there were from the first in 1720 to the one in 1929. That was number 5, and they're all remarkably similar, and they were all followed by lengthy contractions where you have strong recessions and weak recoveries. And that, of course, is driven by the huge debt load that is part of every great mania, and then people get averse to debt and start paying it down, and so the contractions are not good, and then that is when the serious protection comes in, whereby each country looks at its own unemployment, and you know, there's no worry about it now. Unemployment numbers are very good if you stay in the same series for the last 15 years. But nonetheless, in the U.S., you have the case of so many people before it became so robust now. There's so many people that dropped out of the employment game, and that has not really accounted. But at any rate, we're in a boom. Employment is good, but this then becomes a real driver when you have actual unemployment growing, and that is what has gone hand in hand with every post-bubble contraction. So, not that I'm looking forward to it, but we're just discussing the probabilities, and then those employment pressures then prompt governments, domestic governments, to say, oh, we've got to do something. And then it can start. So there was one following the 1825 bubble. Of all things, Jim, it was called the Tariff of abominations. I mean, they knew it was so bad when it was going in, and that's what it was called, the tariff of abominations. So things get pretty compulsive, but we're not there yet. The bubble may have blown out. It certainly blew out on the high of flyers with the Bitcoin stuff and the blockchain, and took a mighty hit. Chances of, reblowing that bubble are very limited. And the interesting thing was that we'd had that target of the December-January window where previous bubbles had blown out, like the one in gold and silver in 1980, and the Tokyo financial mania concluded on the last trading day of 1989. So there have been examples where if you've got a terrific market going into the turn of the year, chances are it might conclude. Well, this is what we wrote up on October the 4th, that everything was going to get bubbled, meaning, it could be the culminating bubble, and even wrote including the Dow Jones. And that turned out to be a hot sector, and it did get bubbled. So the other one, part of that October 4th piece, was that every great bubble eventually collapses. So this one was likely to blow up and collapse, at least the speculative side of it, in December, January. So you had the Bitcoin stuff on the middle of December, and then about 5 weeks later, the S&P set its high, and the correction there began. Of interest is that through the last year, a few years of this bull market, the advanced declines were working very well, and at the top of any bull market, you have to have the advanced declines turning down. And over the last 5-6 weeks, the AD line spiked up nicely, got hit in January, and then has recovered, but it's getting tired. Maybe the advanced decline line is getting tired, but we have to watch it more. And you also have some changes in the credit markets that are a telltale. And this sort of began on Wednesday, and I noticed that during the day that the Treasury bill rate, which had been rising strongly, the U.S. 3-month bill rate rising strongly, all of a sudden during the day reversed and heading down, and I thought, this is interesting. Then it continued through the day, and then I realized, oh, yeah, Wednesday, it's one of those days when the head of the Fed says things. But the change in interest rates and spreads and stuff was pretty strong for the day. And so you wonder, now, did the Fed say something that caused this, or was it coincidental and a market move? And I guess one could say it's a bit of both. So we're a bit of a change here this week from to perhaps going down and testing some lows here. And we'll just see how it goes over this next week or so.
We'll have more with Bob Hoye right after the break.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic Engineer gold mine in the Atlan district of northwestern BC. Check us out at blindcreekresources.com.
Welcome back. We're chatting with Bob Hoye. Bob, copper is below $3, a place it hasn't been for a long time. What's happening there?
Oh, yeah, we looked at in November for a rally in the stock market out to around, February, March, and that would be accompanied by firming up industrial commodity prices. So, yes, we did have a rally in base metals and an outstanding rally in lumber, and we're still getting some bounces out of crude oil. But copper got up and got a little overbought and is now coming down, and I think our target is about 272 on it. The other base metals are coming down as well. That would be aluminum, nickel, lead, zinc, copper, the five main ones. They're weakening. The other one I looked at, Jim, was the lithium, which last year was the speculative darling. I mean, there was just not enough of lithium. And it had a big move up. I think it was to around October. And it's totally broken down now. Maybe lithium isn't as precious as it was. They thought it was last September. But the other exotic metal that's used in technical stuff and batteries is cobalt. Now, it is still moving up. And in looking at that yesterday, the last 5 or 6 weeks of it is getting pretty strong. It's getting some attention and starting to go straight up, and that's often the sign, as you go parabolic on these things, that's could be a climax, and we just have to leave it run. The iron ore prices are not so good, metallurgical coal not so good. So, and then as I should mention again that lumber did a fantastic rally and became overbought on our three measures, the monthly, weekly, and daily upside exhaustion, and also it gave a sequential sell, which is a pattern. So now that was some weeks ago, and it's giving it up. So the other thing is that, in looking at yesterday at the base metals, is that used the monthly RSI on it, which is a momentum determinant. It's up. It got up to the highest since 2011. Now, 2011 for most commodities as well as precious metals was a huge peak, and the speculative energies were amazing on that one, and fortunately our indicators got it, and we plot the silver gold ratio in a bull market for precious metals, and of course in any bull market for those, the silver will outperform gold. And then what happens when you're getting close to the top, the silver gold ratio really flies. So we do a daily RSI on that one, and so in 2011 that ratio, the RSI, got up to 92, and the only time it was that high was in the blow-off of January 1980, that, silver went to 48 and all that sort of stuff. So we then said this is highly dangerous, the speculation, and kind of comforted ourselves by saying, well, it'd be a bear market, but it wouldn't be as bad as the one that followed 1980. Well, of course, any lengthy bear market in the precious metals, when you're in it, is the worst in history, and it has been a very serious bear market. But in looking at the at gold's real price, it is bottoming, and it's getting set up for a really good move.
We'll have more with Bob Hoye right after this.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're chatting with Bob Hoye. Bob, BC Premier John Horgan has asked Prime Minister Trudeau to help control gasoline prices, but it seems to me the provincial government has a big hand in that too, don't they?
Well, we should note that I forget now, but I don't know, maybe 40% of the price at the pumps is taxation, and then there's a carbon tax coming in BC, and they've had a problem with the refinery, and then there's also switching over to summer grade fuel, and there's a hiccup there. Crude oil has been rallying the last while, so there are a number of pressures on it, and so the price for regular is up to, I don't know, are they talking about 155 or 159, which is the highest it's ever been, and that, that's quite a hit, because people who are regular drivers, and you're facing this, and plus a carbon tax coming, which is utter insanity. I mean, carbon dioxide has nothing to do with major changes in the climate. It is just being used. You note how the remedy for this supposed warming and climate change is to increase taxation and to increase regulation. It's strictly a control freak game, and it should be. Well, it is on various research sides being seriously questioned, but it should be more seriously questioned in a broader sweep of the media and more public. But you had in 2014. Had a storyline in the New York Times about there'd be no more snow, and Manhattan this winter has been hit with the most snow since the 1880s. So they can't get their forecast right. But at any rate, the price rise for gasoline in BC is very uncomfortable, and it'll soon run its course. But there's nothing we can do for a while until there's a change in government before they'll get rid of this inconvenient carbon tax. The motorist really does get beat up, because some of the taxation, originally tax on gasoline, was to put money into maintaining highways and bridges. But of course what happens is it goes into general revenues and doesn't go to those sources as it was originally designed. It just goes to funding whatever the government is concerned about today. So the motorist gets the short end of the stick, and he's going to get it for the next while until crude oil and other commodities head down, which is likely after mid-year. I think that, you got to look at seasonal lows. You can have seasonal lows for copper, for example, around November, December. And you can also have a seasonal low for crude oil out there kind of like December, January. So, hey, we got a whole season ahead of us, but the intense pressures could be eased let's say after August or after September. So, uncomfortable as it is, there's nothing that you and I or other motorists can do about it right now.
Bob, thank you so much for chatting with us.
Well, there we are. Good to be with you again, and we'll look forward to next week's.
My guest has been market historian Bob Hoye. He's the Chief Investment Strategist for institutionaladvisors.com. If you have any questions for Bob or any of our other guests, you can send them to info@howstreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.